Gold stocks were down like 9% to the year, so they're still doing good this year. But in one day, they gave back a third of their gains. If you could still buy them this cheap on Monday, do it. Even if they get cheaper, who cares? Phony victory to say, aha, you see, look, I got this, right? And I didn't actually have to do the tariffs. But look, he's already opened up the can of worms. I don't know if you can put the worms back in the can. I mean, the stock market was an accident waiting to happen, right? I mean, it was the most overvalued stock market. It was priced for perfection. This is like, you throw a match in a powder keg, right? That's what he did. So I don't know if even calling off the tariffs is going to call off the bear market.
Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
On Monday to buy it. You can't buy the open in case there's a recovery. But Monday, could be a black Monday. I mean, we had 2 down days, Thursday and Friday. It's a long weekend. Who the hell knows what's going to happen? Maybe Trump will up the ante on China and retaliate again, because as far as I know, China came back with a 34% tariff. Trump hasn't matched that. It's like a poker game, and they keep throwing these tariffs, into the pot. I'll see your tariffs and I'll raise you, right? What's Trump going to do? He's going to re-raise the Chinese. So who the hell knows? It could be a long weekend. By the way, Bitcoin held up. People are making a big deal out of the fact that Bitcoin actually rose slightly today. I think one of the reasons that Bitcoin rose was because gold tanked, and it's negatively correlated with Bitcoin. Now, it's positively correlated with the NASDAQ, so it should have tanked. But Bitcoin is already in a bear market. It's down 25% from its peak. But you know what? I wouldn't be surprised to see Bitcoin have a delayed tank over the weekend, which would actually be very problematic for a lot of the people who own the ETFs, because they're going to have to sweat it out. Because if they got conned into buying Bitcoin today because of, see, it's a safe haven, it's not going down. Look, Bitcoin, right? If Bitcoin crashes on Saturday or Sunday, they have to just sit and watch it. And they have to wait for Monday morning to get any liquidity. So we'll see. I think that these guys were prematurely doing a victory dance because gold was down one day. And again, the problem that I have with all this, I want to do what Trump wants to do, but I know it's not going to work, because Trump is not leveling with the public on the sacrifice that we need. He's telling us everything is going to boom. And when it doesn't boom, we're going to go back to the same old problem of printing money, QE, artificially low interest rates, right? Trump is demanding low interest rates. Low interest rates are part of the problem. That's why we have these huge deficits. We don't encourage savings. If we don't have savings, we can't make the capital investments to build the factories. And so we depend on foreign factories that foreigners build with their savings. And so we need foreign savings and we need foreign goods. We are the country that's been ripping off the world, not the other way around. But anyway, so I think this is a head fake. The drop that we saw today in the foreign stocks, the rise in the dollar, the drop in gold, this is all yet another opportunity to move money out of U.S. assets, which are still very overpriced. Even though they've fallen, they got a long way to go down. But foreign assets still have a long way to go up. The dollar has a long way to fall. So remember, go to Europac.com.
In today's news recap, silver tumbles on trade war demand concerns. Silver fell to $31 per ounce on Friday, the lowest level since January 29th, bringing weekly losses to over 9% as the escalating trade war fueled concerns over global demand and recession risks. China's finance ministry announced on Friday that it would impose a 34% tariff on all U.S. goods starting April 10th, retaliating against the duties imposed by the Trump administration earlier this week. Trump had announced on Wednesday a 10% baseline tariff on all imports, with higher rates targeting major economies, including China 54%, the EU 20%, Japan 24%, and India 27%. Trump even taxed melee with a 10% tariff on Argentina. Equities and commodities took the hardest hit in the sell-off, while investors flocked to safe haven assets like government bonds. Despite the broader market slump, Silver and other precious metals may receive renewed support as recession fears intensify.
I mean, the Democrats and Bill Maher and these guys are like, hey, you guys left me. They had a problem. Donald Trump tapped into a lot of disgruntled Democrats. This is going to hand those voters back to the Democrats. They're going to have a great issue to run on because we're going to be in a recession. Look, I can't even believe you got all these economists that say, well, the recession odds have ticked up a bit. Now they're 30% or 50%. I mean, come on. The Atlanta Fed has got the Q1 GDP at minus 2.8, and Q1 is over. We didn't have a trade war in Q1. We didn't have a bear market in stocks in Q1. I mean, so if we were in contraction without all this bad stuff, how's the economy going to expand in Q2? In fact, if you look at what happened today in the markets too, I didn't go over this, but oil prices collapsed. They dropped. They were at $71.70 2 days ago. They're down to $62.60. Why did oil price collapse? Because of global recession. The Australian dollar down 4.5% today. It was up 1% yesterday, down 4.5%. Why did it go down so much? Because it's sensitive to commodities, and commodity demand goes down in a recession. Copper was down 9% today. What? I mean, that's because the markets are pricing in global recession. Silver was down 7% too. I mean, gold was down like $80, which was about 2.25%. Right? So people say, hey, gold went down. It's not a safe haven. It's still closed above 3,000 for the third week in a row. And the S&P was down 6%. So gold was down a lot less than the S&P, even though it's gone up a lot more than the S&P. So its purchasing power held up. You can almost buy 3 times as much, because S&P went down 6, gold went down 2, right? So gold gained a lot of purchasing power. You buy 4% more stocks today than you could yesterday with an ounce of gold. But why does silver get clobbered? Because of the industrial part. Everybody is pricing in a recession. Bond yields. Now, the yield on the 10-year is now below 4%, 3.99, I think, but just below 4. Now, the 30-year is at 4.41. So the yield curve is really steepening. But why? Why are rates going down like that? Because of recession, right? They're pricing in global recession. There are people that actually think that maybe Trump is doing this on purpose. He's crashing the stock market on purpose. He's creating a recession on purpose so the Fed will cut rates, right? This is his game plan, right? I mean, what an asinine plan if that's what he actually has. But people are hoping, okay, now the Fed can cut rates because inflation is coming down, because look at oil prices, look at bond yields. This now gives cover for the Fed. We just need unemployment. Unfortunately, the jobs report we got today was better than expected, right? So the market didn't get what they're hoping for. But I think there are a lot of layoffs coming in the government. They didn't show up in this report because they were still working when they began the report. You see, if you're working for 1 day during the period, even if you're laid off at the end of the period, you still count as being a job. So so we'll see some government layoffs next month. But we're also going to get a lot of other layoffs because businesses are going to start laying people off because they're going to know that their demand is going to collapse because all the prices are going to go up. Now, there might be an initial rush because some people might rush to the store to buy stuff before, the shelves are gone, because the stuff that's already in the country escapes the tariffs. And I know from these huge trade deficits we've had over the past couple of months, there was some tariff front running going on. So you do have some inventory that people can buy. Now, some smart businesses will already start jacking up their prices because they'll realize this is their last chance to sell products, because once they run out of inventory, the replacement inventory is going to be too expensive for the customers to buy. So that might delay some of the decline. But, I think we're going to see a lot more